Okay. All right, I've started the recording.
All right, today we're going to be talking about how we can look at the bigger picture uh, to help set up our trades and our direction and long-term prediction that allows you to stay with one pair as the trade materializes or it develops day by day. So let's see. Let's take this out. Okay, so when I'm looking at the market and I want an overall picture of what's going on, I like to go over to the 4-hour chart and see how the market has been moving, how long it's been moving, and what might happen after a long move. Now, I know that after a long move, the market wants to take a breather, rest, go sideways, consolidate. You can call it whatever, you know, market makers accumulating, but it does that in every time frame. After every strong move, you're going to have some kind of consolidation. For example, uh, Pound Aussie yesterday had a strong move, right, down, and mostly consolidated for the rest of the day, right, until London gave you an extension. But it was in a tight range. Usually, sometimes it lasts the whole day. There's a lot of news coming out, so this is affected because of the news that came out. Well, a lot of times when you have a big move, you will always have some kind of consolidation. And sometimes you have a whole day of consolidation before the market continues to move. And we can get stuck in the consolidation. So if we can identify some of these consolidations from the lower time frames on to your higher time frames, it'll make it easier to develop a trading plan for that pair. All right, so let's see, which pair, Reggie, do you remember the pair that was consolidating?
No, I don't.
Euro. I think it was the euro. There we go. Yeah, it was the euro.
Yeah.
Let me get rid of this. Okay, so remember what I said, after a big move, the market's gonna have to rest and start making a decision if it's gonna continue that big move or reverse and go up. Well, we can take advantage of situations like this. Not every trade is gonna be perfect where the market just continue to go short, pull back, go short, pull back, go short. There's gonna be a period where the market just wants to go sideways. And being able to identify that uh, will help you in your trades, because then you'll know you're not expecting the market at this point to continue to go short when you know the market is most likely consolidating and is just trying to turn around. So what I do usually when after a big move like this, I look at my filters, right? I like to see when my filters get out of sync. So my filters started getting out of sync. My D2 and H10 got out of sync right here. And what did the market do at that point? Before that, it peaked out. So this is an area of interest for me now, coming in into this week, right? I have a point where the market may want to come back, right? Or if it wants to continue to go up, it's going to have to break this point. But I have an idea of an area where I could start drawing my box. right? Then the market got back in sync and out of sync in this area, right? Got back in sync. When I say in sync, the colors match. D2 and H10 are matching and got right back out of sync. So all this back to back getting out of sync is allowing me to continue to draw my box every time it gets in and out of sync. Now I'm drawing my box right here and I'm extending it, right? The market got in sync here, made a move up, made a move down here, and made a move up and got in sync again down right here, right? So at this point, I'm still extending my box because
Just to clarify, the overall direction is a sell. So a sink in the overall direction is more impactful than a
Correct.
sink in the retracement. Just so you know.
Correct. So what he's saying is the trend is down, right? So when you get out of sync while the trend is down, that's a key area, right? So the trend was up here and it got out of sync here, right? The market was moving up. It got out of sync here first, but then it made a higher high. So this was the initial sync out of sync. This has made a higher high, so it shifted to here. So the trend is up. When it changed color while the trend was up, that's a major impact. So you want to jot that down because that's an area where the market it's out of alignment. So when the market shifted, D2 shifted to go short, you're only looking for shorts. So whenever it gets out of sync to go long, these are areas where the market is out of balance, right? So if you're at this point and the market is at the low from a previous impact location that you had earlier, you're only expecting the market to go up once it get back in sync in that area. So by drawing this box at this point and extending it, without having none of this happening yet, you already have an area of the market that you know whenever it gets to that point, you'll be looking to go the opposite direction because there was an imbalance in that area. And you saw it because it got out of sync while the market was trying to go down. So now you have an extended box, right, for future reference. So the market got in sync here, all right, and got out of sync and in sync to the upside right here. And now you're back into that box that you drew earlier. So this was an attempt to go long and it came right back in the box. So now that you're back in the box and you're in sync to go long, now you're at the bottom of this range that you drew the previous day or the previous week, box that you extended. So now you're at a low level at the box. Now you can start looking for an opportunity to go long, right? And once you're up here and the market gets out of sync, now you're looking for opportunities to go short, which gave you some trades of the lower time frames off the top of the range. So by drawing your consolidation, and this is just a bigger picture, drawing your consolidation, it gives you the opportunity to plan ahead. Meaning if you're coming across this, you have this already mapped out and you come during this week and you see all this going on and everything is lined up to go long, you already have a target. That's a 198 pip target that you can play to for this week. Right. So some of the easiest trades is when you identify consolidation. And
Just to be clear, what he means by you can pay 198 pips is you're doing it on a daily basis on the sessions that you actually trade.
correct.
Just the total range is 198, doesn't mean that you will get 198 out of it. If you're
Correct.
trading the 4 hour, you might get it, but you're not trading the 4 hour because the
So
stop losses will be horrendous.
so this is where everything got in sync, right? Using the 4 hour. So you have identified an area already from the previous, what you've drawn previously, that the market is trying to turn around. Everything's in sync from your 4 hour. And now go down. Yeah. Now we can go down to our 15-minute chart in this area. And we know we're at the bottom of the range. And this is the top of the range. This is the target. So coming in already in Asia, if you're trading the Asian session, you know you're only looking for longs, right? You have the H10 and H3 in sync in early Asian. You know your target is at the top, so you can start taking your trades in that direction, knowing that you're bouncing off the bottom of the range. New York session also gave you a trade 40 something pips. So if you're lucky enough to get in here in the Asian session, that's 164 pips to the top. Well, we're at the top of the range, then you are only looking for shorts. H3 and H10 are aligned, right? You're looking for shorts. All right, it's 25, possible 25 pips here from the Asian session. Now the market wants to go right, comes right back up to the range, right? It attempts a breakout, comes right back in it. Going again, looking for shorts. Looking for shorts. And the market is trying to turn around again, right? Trying to break the range. And it finally breaks the range and stays above the range. So this market could be trying to set up for a breakout of this range. So we go back to the 4 hour. Right. Now we're back at the 4 hour. We're at the top of the range. Everything is out of sync. Got out of sync right here. So this is an area of interest. This is the last place where the market was in sync and going up. And this is the last place where the market is out of sync. Right? And then you can actually break it down. D2 was going up while the H10 was getting in and out of sync in this area. So now you have a tighter consolidation where the market can play back and forth until it breaks out or continues, breaks to the bottom, back to the bottom of the range, previous range. The range is just expanded to there. So now you have focal points where you took a large market and now you're focusing in on what it's trying to do in a specific area. And according to what it wants to do, that's how you play the market. So everything's in sync to go short. coming off the top of the smaller range you drew and the top of the new larger range. And depending on how the market sets up, right, you're only looking for shorts right now. So if it sets up to go short, then you can start taking it to the bottom of this range. And there's about 70 pips to be had. If it breaks out, then there's a potential to come down all the way back down for 183 pips. But this is like planning ahead. Depending on what the market wants to do, you'll be prepared if it wants to break out and continue to go up, or if it wants to play in this little range, or if it wants to break out of this little range and go down. The market will show you what it's trying to set up. At this point, it's trying to go down. D2 and H10 are in sync, so we go down to the 15-minute. And a 15-minute gave you, let me draw a line there so you can see. This is where they got back in sync. In this area, started getting in sync. So go down to your 15. So as soon as I got in sync in the New York session, I know this is news related, but there's your trade. Trying to go right back down to the smaller the range. Now you identified a small range where you can control and you have your focus on to get your alignment in your trades. Right. Once it breaks out of this range, then you expand your focus to the bigger picture. But right now the focus is, does the market want to continue to play in this range? Or am I going to break out of this range? Well, if you're at the top of the range, then you're only looking for short alignments to go short. Once it gets, if you get a continuation, this ball will be taken out, right? You'll have another trade to go down here. If the market breaks out, then you have a trade to go down here somewhere in the bottom, your bigger range. So this has helped me stay focused and plan my trades ahead regardless of what the market wants to do. I know sometimes you can get stuck in a 15-minute chart trying to figure out what's going on. But now that you have a bigger picture and a bigger outlook of what the market may or may not do, it's easier to plan by looking at your smaller time frames. Sometimes you're looking at your smaller time frames, you get lost of where you at in the bigger picture, and you see this ball right here saying, okay, the market must turn around and go up. Well, it doesn't have to do that. It can be taken out because you're still within a range and they could come and fulfill that range. But if you're not aware of that, you can get stuck just thinking the market is going to go up and not realizing the market may be changing for a continuation, because there is a fulfillment down here that the market could be ranging within this, a tight range, which is, I say a tight range, but this is a 115 pip range. Right? If this market only stayed in this range, you can make good pips every day, just playing from bottom to top, top to bottom, bottom to top. But you have to identify it. What helps me identify these ranges is knowing when the market has been in sync and it's turning around, and the market starts to get out of sync, right? This was the
You'll also
Yeah,
notice
this-
many times when it gets out of sync, you'll get your retracement balls, the 1 ball and 2 ball.
two balls, yeah. You start getting these retracement balls back to back. You see how these comes back to back, back to back, right? Back to back. It's in a tight area.
So now you can start anticipating when your retracements are going to show up.
Correct. So if none of this was here and I was looking at this market, I knew this is the last time, uh, last area right here where the market got back in sync and area where the market got out of sync. So now I can extend that box. The market is either going to play off of this and go short, right? But the market got out of sync, back in sync prematurely, and got back out of sync. And now I got balls here. So I can actually narrow down and extend my box and say if the market breaks out of this box, right, I'm going long, or if I'm at the bottom here and I get a signal, right, go down to a 15-minute. I'm at the bottom of that range, right? That's that small range I just drew, right? I'm at the bottom of that range and I got a signal to go long into the New York session, I take it because I'm going where? To the top of the range. And that's 54 pips coming off bottom of a small range you drew. You have a 1, 2, 3 setup, meaning the market has moved up, it retraced, and it gave you a peak without breaking the previous low. As a 1, 2, 3 setup. When we say 1, 2, 3 setup, this is what we're looking at. The combination of either 2 ball, 2 ball, 3 ball, 2 ball, 2 ball, or 1 ball, 1 ball for continuation. You see, I've broken down the larger picture into something small and manageable that I can trade off of. So if I'm at the top of the range that I drew, then I'm looking to see if I get alignment to go short, right? And once I've made it to the bottom of the range, I'm looking for alignments to go long. And what does the market do here? If I'm on a 15-minute chart, I could do the same thing, right? You see the 1 hour and a 15-minute. The 3 hour and the 1 hour, getting in and out of sync, right? Then we're in sync here and got out of sync here, but this is the highest point. Right? And they got back in sync here and got back out of sync right here with the H1 turn color. And it was at this peak. Now I can extend that. Now I can say to myself, I'm at the high of the previous, let's go back to the 4 hours so you can see, I'm at the high, right, of that small range, that range that I drew. And now I'm in a small range. Now the market is either gonna bounce off this top of this range and break the small range that I drew and go back down, or it's gonna continue to range and break out to the top, right? But you'll be ready for it. Yet your focus is now either gonna move down or we're gonna get a break. So you have everything aligned to go short. Going back down to the bottom of the small range, everything is aligning to go long, right? Play it to the top of the small range and it actually broke out of it right here. Came right back and touched this range, and what did it do? Break out of it again. Where to? The top of the previous range, the bigger range.
So
that I
on the smaller time frame, your high of the day, low of the day, high of the session, low of the session, with the range concept comes into play.
Correct. So you look at this tight range I drew. Where am I at in the Asian session? Right? The 1 hour has cycled. I'm at the low of the session. at the bottom of a small range that I just took, that I drew. I'm taking that trade anyway because I'm at the low of the day, low of the session, and I'm just trying to break out of this small range. 51 pips for the Asian session. So I'm not, at that point, I'm not just looking at this. Now I've got a focus point where I can focus on where the market is trying to go. Is either trying to break out or to the upside or break down to the downside. Now I look at my indicators and say, okay, everything is geared for a breakout to the top. So you already know this thing is most likely going to be broken or come back up here and then come back down. But you put yourself in a situation where you focusing at a small picture, homing in on your trade and allowing it for the market to break up. Does that make sense to you guys? Or if you hear anything confusing, just let me know. I know I've been talking a long time, haven't asked any questions if anybody understands it or not.
No, it's really clear, but I would like you maybe come back to draw the range. So where I'm taking is like you are getting range when you have the H10 and H3 or H3 and H1 out of sync, and from there you start draw your range, or you can do it also in the 15 minutes. I lost that part.
It's easier if I'm using the D2 and H10. I'm looking for a bigger range.
Right.
Rafael, to answer your question, I'm sorry. You're drawing the larger time frame range and then drawing a range within the smaller time frame on the H3 and H1.
Okay.
So the larger time frame with H10 and D2, it gives you the weekly, as to where you're going to be for the week, right? Now within that week, if you do the H3 and H1 range and you match it to your H10 and D2 range, that's when you get your trades, right? So from the H10 and D2, when you were at the bottom of the range, you know you're going to go to the top of the range. So what are you looking for? You're basically looking for a low of the day and a low of the session to match the direction of the higher range. Does that make sense?
Yes.
So you draw your boxes when they get out of sync to the, when they have a high of the day or a high of the session. You start drawing your box to see where your ranges are going to be.
Okay.
And when they get into sync, basically the low of the day and the low of the session would have been established at that point. You know you're looking for an entry at that point. You can drop it down to the 1, you can drop it down to the 5, whatever time frame you want to define your entry on. Does that make sense?
Yes.
Okay.
Thank you.
Does anybody have any questions or?
We already lost Deborah. I would do one more thing, Santiago. I would do it for a weekly analysis. You come in on Sunday night and you start doing your analysis to see what your pairs are going to do. That would be helpful.
Yes.
All right, so let's pick any particular pair you guys want to look at?
If Deborah was here, I would have said USD CAD, but she's not here. So pick any pair. Let's take a pair that we don't normally trade.
Okay.
Like an NZD pair.
NZD. Yes, NZD yen.
Sure, why not?
Okay. All right, so we're gonna start with uh, beginning of this week, right? You come in on Sunday, you evaluate this pair, then you go back and say, okay, let me get this thing out the way. You go back, what has the market done? Do I have any areas of interest, or can I draw a box to give me some kind of range? You already at this point, you already see that the market is giving you back-to-back balls, so you know you're already in the range, but you want to narrow it down to make it easier for you. So you know that everything was in sync at this point, all right? That's your starting point. And everything started getting out of sync here. Then it made a lower low and got out of sync again in this area. So this is the lowest point that you found previously. You extend that box. So now you want to know about this high point right here. Can I narrow my box down? That this might be too big of a range and things are shifting to a smaller range, right? So can I do that? Everything got in sync up here and got out of sync. So as you can see here, the D2 was blue and the H10 was red, and we have a ball. So now I can actually narrow down my range. So I say to myself, okay, I got a tight range for the week coming in. So I'm looking for breakouts or playing off the top or going back to the bottom of the range. And there's a 104 pip range. So there's room for me to make something once I decide what it's trying to do. All right. So I'm done with the H4 at this point. I know that the market is D2 is blue and H10 is blue, right? No longer right now concerned with the D2. Now I'm more concerned because I'm homing down on which direction the market is moving now. So now I know my H10 is bullish. So coming into the week, I'm only looking for longs to possibly go. Remember this. This is not there yet, right? Can everybody see that?
Yes.
Okay.
Yes.
You right here, you don't know which way the market is going. You know that the market's trying to move up, but now you have a target. The market is either going to go to the top of the range or break it, right? So you say to yourself, coming in, there's potential 35 pips to the top of that range. Maybe I could catch something, or maybe I could plan ahead, saying, okay, when it gets to the top of the range, now I could be looking for shorts. If everything aligns to go short, then I could start looking for a trade. So you have two opportunities: either try to get 35 or something pips to the top of the range, or just wait to see what happens when the market gets to the top of the range. All right. So to me, trying to catch 35 pips, may be a struggle on the lower time frame on a Sunday when the market is opening. So I will want to wait to see how it reacts when it gets to the top of this range. So at that point, we're breaking this thing down to the 15-minute. Oops. Go back to the 4-hour. Where were we? We already have a plan in set, right? We have our range, predetermined range, and we have momentum going to the top of the range. So my plan is market's going to break out, continue to go up, or bounce off the top of the range and continue to go short. Now, what am I more geared to, right? What do I have here?
3 boards.
Yeah, I have a 3-ball, but this black ball indicates that my higher time frame has a turning point. So if I go over to my daily, right, there's a turning point on the daily, and there's also a turning point on the weekly.
Mm.
So this is an area of interest, and now I'm only biased to the downside. So if I make it to the top of the range, I'll be looking to go short because the weekly is trying to turn around. The daily has already tried to turn around and it's pulling back, right? And I'm in the 4-hour looking to see for an opportunity. So I'm only biased. I'm not even thinking about a breakout at this point because I'm already biased to go short. I just know the market is at a range, right? And what happens after a big move? Market pulls back. There's 3 things the market's gonna do after a big move or any move. The market is gonna pull back and continue, pull back, go into a range, or pull back and reverse. Those are the only 3 things that the market's gonna do, right? So after this big move, I already know the market is pulling back and going into a range, right? We already mapped that prematurely that it's in a range. Okay, so after a range, I'm only waiting for the breakout. But while we're waiting for the breakout, we have to establish that we have a plan and set for the week that we can trade this. So once we go down to the 15-minute chart, we already have a plan and set. Now I'm looking for the market to reach the top of the range, right? And it makes it to the top of the range in this area. And what do we have here? We have a ball on the 4-hour. The black ball indicates the 4-hour has a turnaround point. The yellow ball is just the 15-minute 3-ball. So if I go there and I go back to my 4-hour, I can see the market is trying to go short, has a turnaround point, right? And where am I at? At the top of the range, which I already said that was my plan. If it makes it to the top of the range and I get an indication that the market wants to turn around, I'm looking to go short. So what do we have here? We have a H10 to confirm that this is most likely turning around. So go down to your 15-minute. Now, this is the whole day for a setup, right? You really didn't trade this much. You're just keeping this to the side, waiting for the moment to reach the area of interest. Okay, well now we're at the area of interest. Now I can prepare for the next day straight. So at this point right here, I'm saying to myself, I'm only looking for the high of a session to go short. High of the day to go short, right? So coming into the day, I already see that the market is trying to go short, looking for the low of the day. But my 1-hour is looking for the high of the session. So in the Asian session, I'm only looking for the high of the session to go short, right? So when it comes in, what do we get here? We get a high of the session, right? And we get a saddle again. So it attempted to make a new high, couldn't make it. And we got our synchronizations right around there to go short. You can follow through depending if you're following your H3 or your H1, or if you're just following your H10. But let's go back to the 4-hour. What was the plan? The plan was to play it off the top of the range and maybe make it all the way down to the bottom of the range. So I'm only looking for shorts all the way to this point, which could possibly give me 100 and something pips. And we got a 1 entry here. And this is where I would hold on to that entry and then look for add-ons, right? What happens in the London session? I'm looking for the 1-hour to saddle or peak out and turn color. So the 1-hour saddle, that's my high of the London session. I'm looking to get in again. All right. Now I got 2 positions and my target is the bottom of the range. And it reached it in the London session. one trade for 55 plus 92. That's 140, 150, 140 something.
157.
157 out of a 112 pip range. Right? Just because you,
Just to be clear, there are other add-ons that he didn't take, but you can do add-ons every time the 15-minute refreshes. Basically a fresh cross.
Well, this is just strictly off the 15-minute.
I'm
haven't
just
even
saying a
done-
15-minute fresh cross
Yeah.
would have been an add-on. So you would have had 2 more add-ons before you took your actual add-on.
Correct. Now, if I was doing this off the 5-minute, right? If I was doing this off the 5-minute chart, this is the Asian session. Then I have entry. Still, entry was most likely here. I could have as many add-ons. Add on here. Add on there. And
There's one before that. Right there. Yeah. Right there.
add on there. And then add on here. And since I'm so close, I'm not adding anything else up. The reason I add it because it's closer to the high of the session, of the London session. So I'm not adding on until I get another entry in the New York session, right? But the London, and plus you're close to the low of the range. So if you get out at the low of the range, that is 52 pips plus 57 pips plus 67 plus 78 plus 85 plus 91.
Almost
Oh, what?
420 pips.
420 pips. And that's focusing on what the overall market is doing.
And the overall market is sideways.
It's sideways, it's ranging.
You still got 420 pips out of it. Assuming you took all the add-ons, obviously.
Yeah, that's if you took out, you can range anywhere between, just one 90 pip trade or 80 pip trade to up to 400 pip trade, depending how you manage your add-ons or how many times you get in. But these seems to be, when the market is ranging, those are high probability trades because they tend to bounce off the bottom, set up to go long. And they bounce off the top, set up to go short. Bounce off the bottom, and this one took a little while to get back to the top. But you have, in a matter of 2 weeks, right? In a matter of 2 weeks, you had opportunity to make 72, about 60, 50 pips, and 190 pips. Now back up for 89 pips. And then the market switched back down. Now it broke out of the range for 115 pips. And depending how many times you get in, you can get plenty of pips just on a tight range and knowing you've got your boundaries. And as long as it hits the top and everything sets up to take shorts, I'll take it. All right. This was a little bit more perfect than these because this was ranging even in the tighter range, not a smaller time frame. But once you establish that small range, once it breaks out of that range, then you have 30-something pips to play with. But only watching for last week, and you was only playing this pair, this is your opportunity. So the key thing is finding the opportunities of what the pair is allowing you to what is a pair allowing to give, or what the pair is giving, is knowing when the market is ranging or when the market is trending. Right? I can't treat this trend like a range unless I'm at a, let's say from here to here, if I go up to my daily, no, go up to my weekly. Guess what I have on my weekly? Right? I have a range on my weekly. It bounced off the bottom, created a range, and now I'm going right back to the top. So there was opportunities within these 2 weeks to play this range, and it broke out of the range to give you what we looked at on a 4-hour was this trend on a 4-hour. So you can break it down from larger range to weekly, monthly, daily, 4-hour, 1-hour ranges, even up to a 1-minute range. All right. When I'm in a 1-minute chart, I guess there. All right. I can break it down to a small range and say if the market breaks out of this range, and I'm in sync, I'm going up. Right. It gives you the structure to stay focused and not get whipsaw or have fake breakouts, right? This actually started over here. And you extend that. You didn't have none of this, you just extended this and hit the top of the range. Nothing to get in, everything got in sync right here. Right? Now I can take that. If it breaks it, I'm good. If it don't break it, then I'm out with break even, minimal loss. That's 14 pips. That's off the 1 minute. The market ranges in any time frame. If you go identify it and stay focused, you know you're out of sync in this area. You're not even attempting to trade until everything gets in sync. But now you have a focus point, an area that you can concentrate on. Okay, it's either going to break, it's either going to reverse and break to the top, or continue this move down and break down. What the market does every time it makes a move, right? This is an impulsive move. It goes sideways. It consolidates or it pushes back. And what the market is going to do is going to go down, pull back, go into sideways, right? It's going to go down, pull back, and do a continuation, or it's going to go down, pull back, and reverse. Well, the indicators will tell you that. You're at this point, everything is still bearish, so it doesn't look like it wants to reverse. I am out of sync with the 15 and 5, so I'm starting to get into a range, right? So everything is out of sync, so I'm in a range. If it was going to do a continuation, everything will get back in sync to go short. If it was going to pull back, everything will start changing color and get in sync to go long. Whatever the market wants to do, right? You know, after a big move, it's going to do those 3 things. And whatever the indicators do, that's what you follow. If it's in a consolidation, you see everything out of sync. Once everything gets back in sync, you'll see the continuation, right? The market moved, right? Got out of sync. That's a pullback and got right back in sync for a continuation. No, this wouldn't be a trade to the downside because everything was blue. But if everything was red at this point, right, and you was waiting for a continuation, then it will pull back and then you get your continuation. Let's see if we can find one. The market is trending. Okay, like here. Market is trending, right? This is just the H1 in sync. Here you go. Everything's in sync. Market is trending. What the market is going to do after a move is going to pull back, go into consolidation, pull back, and continue, or pull back and reverse. Well, 5 minutes pulling back, everything else is blue. And once the 5 minute got back in sync, you got a continuation. What happened here? Pull back, 5 minute is blue, red, got back in sync, continuation. What happened here? Pull back, everything got out of sync. Now you have sideways movement, right? You have consolidation. What happened when everything got back in? Well, this became a bigger consolidation because the 30 and the 1 hour is out of sync. But on the smaller time frame, you still got some move up, which is divergence. Everything is turning red while the market is still going up. So that's a sense of divergence. But that's the difference. You know, when everything is in sync in just smaller time frames of cycling, you have your continuations. When everything starts getting out of sync, multiple time frames are getting out of sync, you start getting your consolidation. All right, this is looking at the 1 minute. Everything is out of sync. The 5 minute, 15 is out of sync, 30 is out of sync. With the 1 hour, what do we have? We have a bigger consolidation. Started up here, right? And I was able to narrow it down to right here after we got these peaks. How do we get those peaks? Market was out of sync right here. Got back in sync right here. The 5, 15, and the 30 got back in sync right here. So I was able to narrow down my range. So when I'm here, I already have the bottom and the top, I extended. None of this is here, so now I know where the market is going to be ranging and where it needs to break out. So if I'm biased to the downside, right, the 1 hour is telling me it wants to continue to go short, even though the H3 is biased to the upside, right? I will be expecting to play off the top of the range and go short, top of the range and go short. And this is the 1 minute. I'm illustrating this. You can do that on your 15 minute, but it happens more often on the 1 minute, so it's easy to see more illustrations. But the same tactics you use on your higher time frame. You know, you're on your 15 minute. What do we have here? We have an impulse move, right? Market is starting to get out of sync in this area right here. Right? 1 hour, 15 got back in sync right here. Got out of sync at this location, so now I got a range that I could extend. All right, you go down to a 5 minute and 15, you can narrow it down to a smaller range on the 1 minute right here. But I have, at least I know if the market ranges, it's going to range here, or it's going to have to break out to that range to continue. So you're at the top of the range and everything's in sync, you can go short. If it bounces over the bottom of the range, maybe you make 8 pips, 10 pips. If it breaks, then you're in for the money. Well, where you at? You're at the high of the London session. You establish a range. You know you're at the top of the range, high of the London session, right? The H3 is saddling. So you're only looking for shorts anyway. What do we have here? We have a 4 hour ball telling us you want to go short. So we're only looking for shorts, able to establish ranges, even in the smaller time frames, to get entries, precise entries, to continue in the direction we're trading to. Does that make any sense, guys?
Yes.
Yes.
So I know before when I used to look at ranges, I had to see this, this, then this, then this, and then it was like, okay, this is my range. But all this happened already, right? This already happened. This already happened. I'm losing out on the trades in between the ranges, right? Well, if you learn to start establishing your range early, when the filters get in sync and out of sync, then you could extend that. You establish right here, you can extend that because you know when the market ranges, it tends to range for a bit. You know, and you do that for your higher time frame. You do that when you're in the trench trying to trade.
Yeah,
Right.
worst comes to worst, it'll break that range anyway. So, you
Correct.
know, you have your direction.
Like right here, we're in the 1 minute on a tight range, right? And 1 minute of the time range, everything's out of sync. I know that the bias is long, right? We have a yellow ball here, so the bias is long. So if everything gets in sync to go long, now I can home in and take my trade to the upside. Right? And it's even getting into a tighter range. So it looks like it's trying to break up. It gives you a roadmap, and it breaks the bigger picture down to smaller picture that's easily manageable. Like I said, sometimes you get so stuck in the bigger picture, you don't realize what the market is trying to do right now. So this helps. At least it helps me break down the bigger picture into smaller pictures and something that's more manageable to trade and control and targets and breakouts. Does that make any sense, guys?
Yes.
Yes.
And just, I think Costa was, well, he was a little late this morning, but we were looking the Euro New Zealand, and we were looking a range that we draw in the 4-hour kind of M, and we were looking to get short at the top, and I was a little greedy and I didn't get my 17 or 20 pips that I get, and then he took me out in my break even, and then he go directly to the bottom of the weekly or the 4-hour range. So you see, yeah, you see it. So
Okay.
we draw from the big picture. So we draw that range when the, well, I have what I have. If I go to the 4
All right. So
hour, I have the
was
weekly and the daily out of sync. Yeah.
okay. Yeah. So this is where everything was back in sync, right? If
Right.
you're starting off this week, you were in sync and got out of sync and got
Right.
back in sync in this area. Came down
Right.
in sync and got out of sync in this area. So
Right. And
you can
extend
extend that for the week. Now you
Yeah.
have a possible range where the market can go
Right.
to. Now as the week progressed, it went above
Right.
this range, right?
That's the new range. Yeah.
And you can adjust that,
Right.
but the market came back down. All right. So now the market came down here and got in and out of alignment.
Yes.
So now you can actually adjust this range and extend
Okay.
it. Now
Okay.
you're in a smaller range, but you keep in mind that this is still a possible area where the market could come back to. The market just narrowed its range, right?
Right.
So The bias was to go long. We have a 4-ball on our, it's actually a daily turnaround point, right? But what do we have on the daily? We have a bigger range.
Mhm.
This is where you start going to the higher time frames and you realize that there was already a range on your higher time frame already set up for you. Right. So when you come back down to the 4-hour, that range was already there for you. We just narrowed it down closer to what the price is now. All right. So you look at the 4-hour, you see the 4-hour has a at the 4-hour, where is it? Sorry guys, all right, this is the 4-hour. The 4-hour has a turnaround point. It had a turnaround point here and came down, turnaround point here, came up back to the range, turnaround point here. So at this point, I'm only looking to go short.
Right.
Right. So today, this day I was only looking to go short and I was only looking to go long, then go short. And now we're here. We're looking to go
Short.
short back down to the range, the tight of the range that we just drew. So when you go down to your, you actually go down to your 5-minute and find that point, right? And it happened in the London session, peak, right? So now, first alignment to go short.
Yeah. So I took it somewhere there, and then I moved my stop loss to break even, and he took me out. And
And
then,
it's a continuation to go short. And then in
Costa,
the,
he took it, I think. He took it in.
this is where the news started to come out, I think, but
Yeah.
if you was on the 1-minute, maybe you can catch that. Let's see if we could or not. Yeah.
Yeah, Costa catch that
Yeah,
one.
you can catch it on the 1-minute down,
Yeah.
41 pips.
And Rajiv also took it, that one. I think.
Yeah. And now we're getting H3 and H1 out of sync, right? You can start drawing our ranges, smaller range. Got back in sync and out of sync. So there's the bottom. Right.
It is Friday, so Friday afternoon. That's
Right.
when it was consolidate anyway.
Yeah. So this is the last point where everything got in sync. And the last point where everything got out of sync with H3. And it made a lower low, but everything was still out of sync. So take it from here to here and extend it. Now when you get to the top of the range, now you look for opportunity to go short. Right. And it gave you an opportunity there for about 19, 20 pips to back to the bottom of the range. And the market is attempting to break out of the bottom of the range, but doesn't look like it may do it. You have a yellow ball on the 15-minute. So go to the 15-minute, you see we have a yellow ball and we also have a 4-hour ball. The black inside is telling me the 4 hours also has a turnaround, a small 1 ball. So this can go up or continue to go down to the bottom of this range, or find a 1 ball and then come down. But you don't narrow areas of opportunities where you can play off of, right? You got to think about it. The market ranges more than what it trends. Right? Let's say 75%, 70% of the time it ranges, they say. 30% of the time is trending. So look how many days, 1, 2, 3 weeks in a range, right? Almost 3 weeks in a range, right? 2 weeks in a, am I not right? Yeah, 2 weeks in a range. 1 week trending, 1 week and a half trending before it goes into a range, right? Pretty much 2 weeks, 3 weeks in a range, and 1 week of a good movement, and 1 week of a good movement, and then once again, 2 weeks or one full week and a half of range, because it started this week, a week and a half of range. So the market ranges more than what it trends. So it makes sense to learn how to find your ranges, because there's still money to be made in the ranges.
Mm.
And it tends to be multiple days of good pips in predetermined direction, in predetermined areas of where you want to start looking at it. So you can say, okay, this is going to take maybe a day to get there, or maybe in the London session it'll be down there. Or once it gets down there, then I'm gonna start looking, see the setup to go the opposite way. So it gives you opportunity to plan some of your trades ahead of time when you're in a range.
Definitely.
And since we know the market ranges, and this is where everybody usually gets ate up in ranges, because they're getting in here in sync to go long, and the market turns around. They're getting in here in sync to go short, you know, maybe the market turns around. They get in here to go long, market turns around, turn around. Okay, well, that ate up your whole account, especially if you're on the lower time frame.
It's me.
It used to eat me up all the time. So I decided to say, okay, I need to know when the market is ranging so I could adjust my trading style to the range. I still have the same entries, but now I could fine tune my entries and got predetermined prices of where I want to look at the market and get out the market and get back in the opposite direction. So I'm no longer afraid of trading the ranges. Sometimes looking forward to the range because it's predetermined for me. And it's either the trade's going to be there or not. Once you get up here, the trade is going to be there or it's not going to be there. So once you get up here, you're just waiting for everything to get in sync, right? So if I come back over here, come back over here, I'm only waiting for the market to get in sync. I'm going straight down to my 1 minute. I may not have that much. Oh yeah, it was over here. Okay, can still do it up for 5 minutes. Go down to the 5 minute, and I'm just looking for everything to get in sync. All right, everything started getting in sync at the end of the market. 60-something pips. You want to live through some of the fluctuation here, but you know which direction you're going. Right at the top of the range, I could get in here early, have one lot here, right, and then just add on after that. Add on here in the top of the Asian session, right? Coming into the London session, just add on until I get to the bottom. Get to the bottom here, I'm out of the market. That's 128 pips plus maybe 100 and maybe another 62 pips, right? And this is all in one day. Just knowing that I'm in a tighter range, I'm at the top of the bigger range, and I'm only looking for shorts. You know, we created this tighter range after the fact. Does that make any sense, guys?
Yes. Yeah. The amount of thinking that is required in order to be part of your mindset is too big, and we must practice this, I think, at least for 2-3 months.
Well, don't, I know I gave you a lot, but try not to overanalyze it, right? It's like I said, right? If I'm in a 4-hour chart, the market only does 3 things. It ranges, right? And it, 2 things, it ranges, it trends and it consolidates. You know, at different types of consolidation, pullback, whatever. Well, what do we know after every trend? We get consolidation. So if you keep focused on that after every big move, where is my consolidation? Am I getting a consolidation? Okay. Can I start drawing my consolidation? Right? If I'm over here, I have a 3 ball, everything's in sync. I say, okay, I have a 3 ball here. When does everything get out of sync? Right here. So I just draw and extend it. If it expands, I expand. Well, now you have an expanded range for 1, 2, 3 weeks. And then it expanded a little bit more here. Right? The market cannot continue to go in one direction for a long period of time. It has to pause, it has to pull back, it has to do something. So by just breaking the same concept down, that the market, even if I'm in a 5-minute chart, right? The market just made a big move, right? What the market's gonna do after a big move? It's either gonna pull back and reverse like this, or it's gonna pull back and go into a range, right? If it's gonna go to a range, it's gonna follow. It would have continued to follow in this range. You have the top, you have the bottom, but it broke out of that range. Well, that's one of the things that the market does. It had a strong move up, pull back and reversed, right? Now, what's the difference between this one? Had a strong move down, market pulled back and went into a range. If you keep in mind that that's what the market does all the time, you'll start looking for it. You know, it just makes it easier for you, right? Market had a big move, a move. What did it do? It started to range. It's either gonna pull back and reverse like it did here. It's gonna pull back a little bit and continue, or get into a range and then decide which way it wants to go.
How long do you travel in the past of the chart in order to draw the range?
I mean, how long I extend it?
To the left, not to the right. How much previous data you use in order to draw the boxes?
One, it depends what time frame I'm in. If I'm here on the 5-minute, I don't need that much data. I just need to see what's going on now. So I'm looking at how my 15 and my 5 minutes are reacting to each other, and my 30-minute, right?
Yes.
I could see that
Because if you travel too much at the past, you are going to change the range.
Yeah, change the range. It's going to change. So I just need to know what changes are happening now as it's starting to develop. So when you see this market peak right here, right, it was getting out of sync. If you look at the 1 hour, 30, 15, and the 5, everything was in sync on the move down. It started to get out of sync until it peaked here, right? where everything got back in sync and got back out of sync. You see the 5 and the 15 getting back out of sync. That's telling me the market is ranging, right? Now I found my top and my bottom of the range initial, and I can extend it as far as I want for as long as the market stays in that range.
I see. You are looking a balance and a balance
Yes.
areas, two areas, the
Correct.
balance area and the balance area, and then
Yeah.
you draw the box.
Correct.
Okay.
Correct. Yeah, that makes it a lot easier. So
A range is a balance area because the price is trying to decide which way it wants to go. So when it goes up and down, it's basically balancing the price, right?
well, it's yeah, it's out. What do you mean? It's out of balance as
Yes.
far as it wants to go down and wants to go up, one down. It's not balanced enough to make a move in one direction.
I'm looking at like a scale, right? The buyers and sellers are trying to figure out who's going to win.
Correct.
And so they're balancing the market, but sometimes the buyers win, sometimes the sellers win. Till, one of them gets exhausted and then takes over.
Correct.
That's
Okay.
what I thought balance. Okay, never mind. Different definitions.
Yeah, there's yeah, I mean, yeah, you can actually look at it that way, because there's with the market makers, they already have a predetermined direction that they want to go. So they taking all the retail traders or orders in the opposite direction of where the market is trying to go. And then once there's no more, then they step in, and that creates the scale to shift, like Reggie was telling. It shifts the scale to their favor to move the market short, because nobody else is trying to go long. The market makers are taking everybody here that's going long. Once there's no more longs here, then they step in and break it down to short, take everybody stops. That's where the scales tips in, like Raji was saying. So yeah,
The market makers are actually getting out of the short trades there by taking it long.
Yeah.
They can't get rid of all their trades all at once, so they have to go in piecemeal. And that balancing area is where the piecemeal retail traders to go against where they want to go, so they can get rid of their positions and then reposition themselves. That's not the way to look at it, but you don't need to know that.
So this is why the market does that, right? Where every time it moves, it has to do some kind of pullback consolidation, because the market makers have been in this trade all this time. Well, in order to get out of their trades, they can't get out of the trades all at once, or it's going to continue to push the price in the direction that they don't want, right? It's going to push the price up, and they're trying to get out at the best price. So in order to do that, they have to keep a range of where
As they're selling down, they're also buying.
they're also buying. So
Okay, so they're positioning themselves for a long.
correct.
And
So-
that balancing area is where they're getting rid of their shorts. And
correct.
then they'll move it up to get rid of their longs.
So they're short here, right? So every time they get rid of their shorts and go long, it's going to push the market up. Well, if they get in all at once, they're not going to be able to get into all their positions. The market is going to keep going up, 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 and they're going to be stuck with all this short position. So they have to establish some kind of range to unload their position. So every time it comes down here, they take their profits, the market moves up, right? And they push the market back down here. Every time they get down here, they take their profits out, the market moves up. Every time they get down here, they take their profits out, the market moves up. And now the range is narrowing. They come down here, take their profits, the market moves up. So after a big move, you have the consolidation in order for them to unload their positions, which is telling me that the market may be trying to turn around, right? If they decide to keep the market pushing down short, then they'll continue at one point, start adding after they unload all their positions and they say, okay, we still want to move this market down. Now they start adding positions, right? They could be doing that too. They could be adding more positions. So every time it moves up, they're adding positions short, move up short, move up short. You don't know what they're going to want to do with this consolidation. They're going to take it up or take it down. But we're using the ability of, we're taking advantage of what they have to do and trade off of that. Okay, we know where they're in consolidation mode. They're either buying, getting rid of their shorts and buying, or adding to their shorts every time they come up here. I don't care what they want to do. All I know is that the market is down here and I want to go up and I want to go down, just playing along with the range that they set. They set that range, I'm gonna play it. Go up and down, up and down. Because they have to do this. This is part of the market structure. They have to do this in order to load and unload their positions. Once this big move right here is because they're already loaded. They're just pushing the market. So you either in with them or you're stuck here trying to go long, and they took the market out of all those people going long, going short. That's why the market trend goes sideways more than what it does trending. And what you'll be able to do is take advantage of that. Now, this is 1, 2, almost 3 weeks, 2.5 weeks of sideways movement. In other words, you wouldn't even paying attention to it because you say, okay, this is just too hectic for me. I'll pick a pair that's trending. Well, most likely, most of the pairs are probably going to be doing the same thing. You know, you go over to the Euro CAD. What it's been doing has been sideways for 1, 2, 3. Euro CAD's getting ready to do a big move, one way or the other. It's been sideways for a long period of time. It's a lot of accumulation. Right?
What's the range on that one? Top to bottom?
Top to bottom right now. It was 154 pips and 55 pips.
Yeah.
So this is part news related is big spikes. So
The spikes are stop points, basically.
but if you're down here, you position yourself, right? You're out of balance, right? Market gets back in balance, gets out of balance right here. So you know that this is the bottom part. And come back over here, go down to your 15-minute chart. And you're only looking for longs. You're at the bottom of the range. You're only looking for longs. You got a long in the New York session. Now you're at the top of the range. When you're looking for shorts, you got an alignment right off the top. One in the London. You got an opportunity in the Asian session, London, and New York session. So 3 opportunities to put an add-on on each. One in the Asian session, one in the London, and one in New York, which would have gave you 100 pips. Let's say another 100 and 132 one day. Just because you established the range, you're at top of the range, and now you're looking for shorts. And you got a turnaround ball, right? On your 4 hour. So all these turnaround balls on the 4 hours gives you a heads up that the market wants to change direction. Right at the ranges, that's a no-brainer. You're at the range at a turnaround point, you need to start looking for shorts. Right here, you're at the bottom of the range and you're looking for longs. You know, this gave you a smaller range, but once it broke out of that range, you got your opportunities to try to head to the top of the range. This didn't quite make it to the top of the range. And it gave you a 4-ball turnaround, so start looking for shorts. Asian session gave you a short. See, now your range is narrowing, right? If you go back to your 4-hour chart.
You're coming in really soft or something.
Yeah, hello.
Yeah.
All
Okay.
right, when you go back to your 4-hour chart, you see that the range started to narrow. All right, go back to your 15. There's a narrow of your range. So now when you get here, now you see why you have a ball here to go long. And now you see why you have a ball here to go short. And now you have a ball here to go long. So even with today's trade, if you was looking yesterday and today, you already knew you were only going long here after the London session, right? You were only going short in the London session at the beginning because you was trying to reach the bottom of the range. Well, now you're at the low of the day, low of the session, bottom of the range. You're only looking for longs. Now you're at the top of the range, right? At the top of the London session, high of the day, low of the day. I mean, high of the day, low of the, high of the day, high of the session. Yellow ball, 4 ball. You're only looking for, at the top of the range, you're only looking for shorts. Now the opposite. You're only looking for longs in the New York session. I know everything wasn't aligned, but if you know you coming off the short, you got a 1-hour trade alignment, you can take that because you're bouncing off the bottom of the range. It becomes a higher probability trade after that. Does that make sense, guys? So you see how out of this big range, now they're starting to narrow the range. So the narrowing of the range is telling me they're gearing up to break this thing up because they no longer need these area points to gather what they need. Now they're really trying to focus in on breakouts. This market could continue to go short or just completely just reverse and start trending up, just like this was trending down and start trending up. Rajiv, anything else you want to add to that, or
No, that was it.
does that anybody have any questions or want to look at something else? Or
And since Len is here, how does this fit into his system?
all right, is Len here?
He just start talking.
Oh, okay. Let's see. So what Len has created, he on a 5-minute chart, you know, he has his 15-minute balls, right? Which is the yellow ball. And inside you'll see like a black dot, right? On this 5-minute. That's telling him that the larger time frame, 4-hour, is at a peak and has some kind of ball, right? Right here it has a yellow ball. Right here has a 2 ball. Right here has a 2 ball. And then in between here, we have 1 balls. Okay, so if I go all the way back, 1 more here. All right, so I'll start right here. So hopefully I got enough to go back. All right. So see the black dot ball, it's telling me this is a yellow ball, right? That's the first ball we saw on the 4-hour. So at this point, I know market is trying to turn around. One, we're at the top of the range, but even if it wasn't at the top of the range, we'll be looking for some kind of turnaround point. Well, is it trying to turn around? H10 is bearish. H3 is bearish, so we're looking for shorts, right? And we got a short here, right? We get a short in the London session. And we get a short in the New York session, right? And what do we have here? We have a 15-minute yellow ball, 3 ball with a dot in the inside, which indicates that this is I believe, a 1 ball. A smaller dot is a 1 ball, right? If we go back to the 4-hour, you should see that that's a 1 ball on the 4-hour. Go back to the 5. So this is a possible turnaround point. So we're only going to be looking for longs as long as everything's in sync. H10 and H3 got in sync here. So we're only looking for longs, right? We have to lower the Asian session. Everything's in sync to go long, right? If you're coming in the London session, you're in sync to go long. New York session was in sync earlier to go long. Then they came back to the bottom of the session and got back in sync somewhere here, right? So we continue to go. When we're looking for longs, the next day we're looking for longs. The Asian session gave you a long. London session gave you a long. And I want to say there's a ball there.
There are no balls. There should be a ball there, but I don't know
Yeah,
why it
it's-
didn't print.
Yeah, there should be a small ball here, like a,
Probably a 1 ball on the 4-hour.
yeah. So you go here, go back to the 4-hour. Yeah, there's a 1 ball here. You can barely see it on the 15. But I also have it on my 15-minute. You can barely see it either.
Why
But-
they're so small?
I have no idea. But if you're not sure, you just go over to your 4-hour chart. If you don't see it on there, you see a ball there. You say, okay, the 4-hour does have a ball. So I'll go back to your 5. Is this the same location? No, that's the starting. We're right here. Go back to your 4 if you're not sure. Go back to your 5. And we already know by looking at the 4 that there's a ball here. It's supposed to be a ball there. And we're only looking for shorts. Everything's aligned. H10, H3 on down is aligned to go short. And there's probably another ball here. This is where I drew the line. So this is also a ball on the 4-hour. So now we shifted from going short to looking for longs, right? Where we get our first alignment in the Asian session to go long. London didn't really get an alignment to right here to go long. New York session and alignment to go long. Well, what do you have here? That H10 is already shifting. And what do you have here? 4-hour ball again. Now we're only looking for shorts. Everything's aligned to go short already. Next day, you're only looking for shorts. Short, short. Now we got another ball on the 5-minute and the 4-hour. Now we're only looking for longs. Everything's aligned. So London gave you some pips. And going into the New York session, got aligned again. And 64 pips all the way to the top. And you're looking for the next day. You're only going long. You got a short move, not much. An alignment here, but you see the H10 is already shifting. So now you're at the top of the range. You got a 4-hour ball on your 5-minute. Now you're only looking for alignments to go short. So it allows him to scan through the pairs easily and see if there's any trading opportunities at the same time right away. So he sees his balls here. He already know he's trading off his 5-minute chart anyway. as soon as everything gets aligned, he'd start looking for opportunities to get in.
But by drawing the ranges, it gives you further assurance that you are at the top or bottom of the range and that direction is correct.
And the correction correct. So we prematurely drew the ranges, and same thing kept happening at the top of the range. 4 hour wanted to turn around. 4 hour wanted to turn around. 4 hour wanted to turn around. This one didn't quite make it all the way to the top, but it turned around prematurely. Turn around. Close to the bottom of the range. But this is when we started trying to narrow down the range. Hey, Len, does that anything else you look at or you wanted to add to that, or does that kind of depicts what you're looking at and what you're doing? Is he sending any messages?
Is he here? I know he's here. He's signed in.
Oh, sometimes he can't. His headphones not working. So I'm saying if you put it on a chat, anything. I don't see any chats. Yeah, maybe he stepped away.
I asked him to unmute. So anyway, yeah, I mean, his system, I mean, the way he looks at it, he looks for simplicity by putting the
Correct.
4 hour ball on the 5 minute. And that gives them a potential direction. And then what we've added to that is the range to give assurance whether you're at the top or bottom of a range, in the ranging market.
Correct.
And it just helps you stay in the trade.
Correct. Because when you see balls back to back like this, it's going to be in a range. So you want to take advantage of every time the market turns around. Right? You have a predetermined range and you know exactly where the balls may or may not appear, either right on the dot, a little past it, or a little bit below it. But once you see it, turn around, you see in your 5 minute, the market is trying to turn around. It could be right at the range. It could be a little bit prematurely to it. But you're within an area of where the market wants to just continue to go up and down, up and down, up and down. And this just makes it easier if you stay on your 5 minute.
Did you guys want me to say something? I'm sorry, I was on the phone at work. I saw the unmute thing.
Oh, okay. Oh no, just if you was listening, if you wanted to add anything to what we were saying about how you're looking at the market.
Yeah, I need some training on how not to be a big chicken.
How to do what?
How not to be a chicken and stay in.
Oh.
I was just joking, that's all. But no, everything is fine. I'm just just the balls have helped me a lot. The black, the 5 minute balls have helped a lot. Just having confidence and taking the trade and staying in and not cutting yourself short. That Asian session is kind of difficult sometimes because it's kind of, iffy, but I noticed that has helped me a lot. The balls and taking the top 6 on Clark's list to kind of help me narrow down what I'm looking at. Cause I tend to look at too many pairs, and I'm just doing Clark's top 6 and then just going from there and then looking at the balls on the 5 minute and go from there.
So you can avoid being a chicken, to phrase your term, by looking at the H3 Osma. If the color doesn't change on that, you can stay in the trade longer. But if a ball appears before the color changes, you have to tighten your stop losses and stay in that way. So yes, there will be retracements, like 2 ball retracements, which are going to cause you to panic. But if the H3 Osma has not changed colors, that's just a retracement at that point. And
For example,
you stay in your trade. So you're trading yellow ball to yellow ball. Obviously, today it worked out from yellow ball to yellow ball, but most of the days you're coming in the middle of a yellow ball to the end of the yellow ball as a trade.
Correct. For example, like in the London session right here, right? Let's say you got in where everything is lined up right here. Well, now you get into consolidation. And you're asking yourself, should I be in this trade or should I not be in this trade? What's going on? All right. Well, the market's already moved, one push, two push, and it's just consolidating. And the market is either gonna pull back and reverse, or pull back, continue right away, or go into consolidation. So you see the market going to consolidation, and you see that's with your lower filters going in and out of sync, right? But your main focus is, what is the H3 doing? H3 is found the high of the day. Now it's looking for the low of the day. So this is still red, right? You're saying this is still red. You're going to get all these fluctuations, right? But now, if you know how to anticipate your range, you know the market can go sideways for a long period of time. This is off the 5 minute. Now you know the market is ranging. That's one of the conditions it does. As long as you know those three conditions, the market's going to push down, range, push down, reverse, or push down, pull back, and continue for continuation, like trade right here, right? Move, pull back, continue, pull back, continue. Did it pull back? Yes. Did it reverse? No. It said, did it pull back and continue? No. So you're in a range. Those are the only three conditions you're going to get after a move. So you identify, okay, it didn't do the other two, I'm in a range. H3 is still red, so I just have to wait for it to finish this range, right? If the market wanted to turn around and break out to the top, you see the H3 start to flatten out, or maybe start to change color a lot faster because it's been ranging. So it gives it enough time for the market to change color. So the good thing about it being in a range is you're going to get a faster reaction to the indicators. It's not going to take that long for this to change color because it's been going sideways for a while. And it takes longer to change color, right? Like this move right here, right? It didn't change color to over here after the market has been reversed because this is an impulsive move. And what's it called, like a parabolic move? And it just didn't give enough chance for the market to consolidate. It just pulled back and continue reverse. So it didn't give the H3 enough time to change color. But the H1 changed color, right? So
But
if
this
you
is
end
the
it,
point that I'm making, that, you see your 3 ball appear somewhere, let's say, at the beginning of the US session.
correct,
And you're tightening stops at that point, your technical stops.
you're
So-
timing your stops.
Yeah.
So if you manage to get in somewhere in here, right, and you're in a range, now you pretty much predetermined area, you could time your stop, right? Because if the market breaks out of that range, you don't want it to come up here and get all of this. You don't mind it getting, maybe 5 or 6 pips, but you're giving the market time to finish this range out. You're looking at the H3. The H3 is steady red, right? And you haven't broken out of this range, so you try to stay in it, right? Usually, if the market's gonna turn around, they'll break out of this range. Everything will start sinking in to go long. At that time, you start seeing the 1 hour sinking in, the H3s coming in and out of sync. Then maybe you want to say, okay, I'll wait for it to break out again and get in again. But as long as everything stays red on the H3, right? Your H10 is red. Your H10 just turned color, so you're going for a longer move. H3 just turned color, so you're going for a longer move for the day. All of these could fluctuate, right? They're gonna fluctuate in and out depending on how the market is waving in the market. So don't let the lower ones get you out, right? Especially if you can identify, if you know every time the market moves, it's gonna do those three things. And if you can identify you're in a range, then you stay in your trade. If you identify the market pull back and it's continuing, then you just move your stop or you add on for a continuation. If the market reverses, then you out of that trade. You know, you don't let it hit your stop. Right, you up here and the market is reversing all the way up here. Right. First of all, you'll have a 12 pit stop. So if H3 turns, H1 is turning and the market is moving strong, you may want to get out of that market. If the H3 is still red and the market is just doing a pullback, once everything gets back in sync, then you can do a continuation. Does that make any sense?
We got 10 minutes for this session. So
Okay.
if there are any questions, please ask or we'll wrap it up.
Did that make it a little clearer for you, that Duff? As far as
just stay in the direction with your higher time frame, your H3.
yeah,
And
H3.
just, yeah, because I've been basing everything off of either the if I see a 30-minute turnaround or I see the 1 hour starts to turn around, I start trying to get out, and then it just go into consolidation, and I just totally forget about it, and then come back and it then broke out and kept going, and I just missed my opportunity again. So
Correct.
yeah,
Yeah,
it's just
and that's one of the reasons we brought in the trying to identify your consolidation. Because now it makes it easier to say, okay, now I'm focused. I'm only getting out if it breaks out of this consolidation to the top. If it doesn't break out, then I'm waiting for another entry or staying in my trade until it breaks out to the bottom.
so my question because I draw my boxes as well. Now, when you saying it, when it hit the top of the range, that's when you look for entries if it's, if everything is going down, or because I've been trying to wait for it to break completely out, then start looking for trades.
Well,
and I just kind of find myself kind of in a situation where it's not, a good trade.
Yeah, it depends on how tight or how large is your range. Like this is a 7 pip range. By the time you get everything in sync, you're already off the top of the range in the bottom. So a range like this, a tight range like this, you're just waiting for the breakout, right? Or larger range like this right here, a higher time frame, or even a larger, smaller time frame range, which could be the Asian session, right? Because the Asian session wasn't a tight range. This was a 20 pip range. Yeah, when it gets to the top of the range and I get in sync, it gives me room for opportunity. I don't have no room for opportunity here, so every time it hits the top, I'm getting in when the market is out of sync, and I'm just guessing that the market is going to break to the downside, right? What you want is reassurance that the market doesn't reverse on you, and market starts to go the opposite direction. So
you're not really guessing because you have your 4 hour ball telling you your direction.
Correct.
So if you really believe in that direction, you're going to take your entry when it syncs up to go south for a sell, even within the range. But you want to take more than one trade within that range, just so your risk management, account management comes into play.
Yeah, but the range is so tight.
Yeah, no, I understand. I'm just saying that you could take a short, but don't take more than one short. Otherwise, you're clumping up your trades together, and then you're taking a higher risk.
Correct. So if you can see why you're in the range, the only time everything was aligned when it first started into the range. Once it got to the bottom of the range, everything got out of alignment. So here, all the way as I'm moving, nothing's aligned. Nothing's aligned. Nothing's aligned until you got over here. And this is what you're waiting for everything to be in alignment again. So while all this was in a range, nothing was in alignment for you to take a trade short. And because it's a tight range, you either, if you want to get into multiple trades and you're not afraid of getting in, yeah, every time it hits the top of the range and you banking on the market to go short, regardless of what happens over here, right? Because the higher probability is that it's going to continue. The probability is on your side, but the market can do whatever it wants. They can change directions at any time, but the higher probability is that it's in your side. So at a tight range right here, it's not that much of a gain to get in 7 to 6 pips. It's best to let everything align and then get back in, or add on to your position after it aligns again. Because you won't be able to get in here. Nothing's aligned. And if you're just going off, okay, hit the top of the range, then that's just, a personal thing that you decide on. But the bias is still short. But yeah, it all depends on the range and how I'm gonna, a tight range like this, I'm just sitting through it. I'm already in it, right? I'm just sitting through and then adding when the market decides to break out, adding again, which is 53 pips.
I don't want to trade in between sessions anyway, so you just wait for the US session to give me an entry.
Yeah, you can wait after it breaks out and gives you another alignment somewhere around here.
Yeah, on the
So
1
sure.
minute, it'll probably give you at the beginning of the US session, but yeah.
Yeah, but this is just strictly off the 5 minute.
Right.
Yeah, so the bigger ranges, yeah, it makes it easier to say, okay, I'm at the top of the range, just wait for everything to align, because you're going for the bigger move. Tight ranges it gives you an opportunity to sit and know that the market is ranging and not panic out and wait for the optimal opportunity to take a trade. All right,
You
bigger
can also
ranges.
set a pending order at the bottom of the range to go
Correct.
short, just in case you're not at desk or something.
Yeah, you set it a few pips.
That's
in
another way
case-
to get in.
Yeah, I was thinking about that, but I just wasn't sure.
Yeah, but does that answer your question about getting in the ranges?
Yes, definitely.
Yeah. Tight ranges. I'm sitting on my hands and I'm already in it. I'm just letting it do what it does and letting it break out. If I'm not in it, I'm waiting for the breakout to get in it. Right. But ranges are good. A lot of people don't like the ranges, but ranges are good. Ranges, it means there's a pause in the market and there's a higher probability chance the market is going to continue in your direction.
Yeah, that's how I'm trying to look at it. That because I was looking at, I had missed out on a trade in the pound Aussie during the Asian session. I
Today,
didn't catch the first part of it, but it had the continuation, and I missed out on it because it went into a range, and for some reason I just felt it was going to, reverse, but it didn't. It continued.
when was this? Today, yesterday, or
Yeah, today.
today? So in
Yeah,
the Asian
so-
session, if you're looking at the 5 minute, it started off ranging from the previous day, and it got into a tighter range, right? So you already knew you was looking for a high of the day coming in, so the market wanted to go long. She's just waiting for a low of a session, right? And where is it at the bottom of the range? Now you can start looking for a synchronization to go long. Now the market pulled back and broke the range, right? You could extend this, right? The market really broke out of the range over here. And then, 35 pips to the upside. And now you at the high of the session, right? You're no longer in that trade. Looking for the next opportunity to go long. because your H10 is long and your H3 saddle, so it's looking for another high. Or once you're in the London session, now you're at the high of the session, high of the day, in sync to go short. You can take that down short. What the market does after a big move, it pulls back.
And that was a spike. It will be hard to get on it in a 5 minute.
Well, the one I missed was if you come back to your left, we see where it was pushing up, then it turned red. Well, as it started to get close to the edge of the session, I thought it was just going to continue to consolidate because it was getting to the point where it was going to be between sessions.
Mhm.
So it looked like I thought it was going to consolidate. So I just left it alone. And then it took off on me. So I was like, damn, I was just upset that I missed it right there, that section there. Because it was
Alright,
getting
so-
close to the edge of my session box. And
Correct.
it was in that range. And then all of a sudden it pushed up and I just missed it. And so, but it was
So-
like when it broke out the range, I guess when it turned from red to blue, that was almost about 40 pips, 30 to 40 pips almost. So I was just a little upset that I missed that trade,
Yeah.
even though
So-
it was between the range.
Yeah. So if you're on a 5 minute and your range is here, you have a 15 pip range, right? Over here, you had a what? 18 pip range, 19 pip range. All you're doing is at this point, it's just waiting for it to. You don't know when it's gonna break out, but if you look at your right here when it turned blue, right? Your H3 is telling you it wants to find a high today, and your H1 is telling you it wants to find the high of a session. So you know coming into the London session, you're gonna be looking for the high of the London session to peak out. So at this point, now you're just looking to see if it's gonna break out of that range when it align. And you had an alignment here and it broke out. And you had another alignment here. At that point, it pulled back on you. So
Yeah, the reason why I didn't take it comes kind of like what Rajiv said earlier. You don't want to play between sessions. So,
correct.
and that's what I thought it was going to do after it made that big push at the beginning of the Asian session. And I saw it turn red and it was consolidating. I drew my box just like that. And I was like, okay, well, it's between sessions. So I left it alone. But then after a while, it just broke out and kept going,
Yeah.
which was a good trade opportunity because I can't stay up and stay late and trade like you guys. So, I want to try to maximize my opportunities when I can. And that would have gave me what I needed. And I stayed out of it because of that reason. So
Correct.
yeah, I just can't,
Now-
I can't really stay up late and trade like
Yeah.
that.
The only time when you're in a range and you want to start looking at the market, right, for potential breakout is when everything starts to get back in sync. If you could see that while it was ranging, nothing was in sync. You see the 30 is out of sync with the 1 hour. The 15 is out of sync with the 30. 5 minutes in and out of sync with the 15, right? When you finally get the change of color, now you start changing focus. Okay, something's happening. Is everything starting to get back in sync? Okay, my H3, my H1, my 30 are in sync. So all I really have to do is just wait for my 5 and 15 to get in sync to take a trade. All right. You'll know when it's time to start to trade when everything starts to get when everything look at this range, everything was out of sync. Whenever you did get in sync, it got out of sync right away. Whenever you got in sync, right, it moved up when it got out of sync right away. Right at the top of the range, you're out of that market. Right? Everything got back in sync right here. Got out of sync, you out of that market, you're at the top of the range. It's not ready yet. Everything got back in sync here. Hit the top of the market, got out of sync, you out. Back in sync, and now it broke out of the range, right? And it got out of sync here. Now you get your 1 hour and the 3 are steady. They're not in and out like over here. Now everything is starting to stabilize. And the only thing they're coming in and out of sync are your lower ones. And it's going to be your pullbacks. I know this is a little bit more drastic because it's a little harder because it's a lot of pullback, back and forth, back and forth.
Yeah, I
You know,
missed that part. I had took a nap.
Yeah,
So I missed that part.
this is a little harder to trade, right?
Yeah.
Because of the movement. The Asian session is not an easy place to trade.
Well, you and I kind of discussed what's a good time. So I've been kind of trying to wait to that time. And that's just the part about the Asian session where it's just so fickle that you don't know when it's going to give you your opportunity. So
Yeah.
I was just trying to wait because I saw you saw that big range it was in. So I was like, okay, I extended my box and I was just thought it was in that range. And I stepped away for, I said, well, let me take me a little nap and lay down for a little bit. And it took off. And then I said, well, let me wait for the continuation. And then as it started to continue, it started getting to the edge of my Asian range. And I was like, well, they said, you're not really supposed to trade between ranges. But like I said, I mean, maybe for me, since I can't stay up late, if I see those opportunities between the boxes, I might have to take them because I've been missing out on a lot of those because I try not to play between the range,
but remember,
between the boxes.
if you're gonna play in between the boxes, you have to establish your direction. Meaning
Gotcha.
you have to plan ahead. What's the market trying to do? Well, right before you got into the boxes, what did the 1 hour do? It cycled from a high of the session to a low of the session. What's the next step for the 1 hour? To find a high. So in order to find a high, it's gonna have to peak out. So if you went within this area right here, you're going in the direction of the H3 and the H1. They're both in sync. So that's the only direction you're going to be playing, right? And you're seeing that it just peaked out. So you're going to be playing into the London session, trying to find a high point into the London session. So you have to be aware of what these two are doing, so it could give you a higher probability trade here in order to play within the session. Because if this and this are doing the opposite things, and you're trying to catch a breakout, you're going to be sitting there and wasting your time trying to catch a breakout because these two are not in sync. Does that make any sense?
Yeah, I got you.
It's just like over here when we come into the Asian session, trying to establish what the 4 hours doing and the 1 hour is doing. So if the 4 hours trying to find a high of the day, I'm looking to take trades off the low of the session. So I already know ahead of time, whenever the 1 hour cycles down, that I'm gonna be looking for a trade. So same thing here. We know that the 4 hour is still trying to look for a high of the session, and the 1 hour has cycled down. If there's gonna be any breakout, it's gonna be to the top at this point, right? Until things change and now the market turns around. So you have established your direction and ask yourself what the market is trying to do at this point. So you're sitting here and you say, okay, what's the high probability what the market is trying to do? It's found a low, so now it's going to look for a high session. All right. We're looking for the high of the day, and it attempted to cycle to look for a low, didn't go anywhere, and it settled. Okay, so I'm back in motion to find the high of the day, and you find the high of the day in the London session. You find the high of the session in the London session by the cycle of your 1 hour. So whenever you're anywhere in the chart, you ask yourself, what is the market trying to do? Even though if you have the overall picture, I could say I'm going short. I'm gonna looking for shorts, right? Because this is red, right? You have to always ask yourself, what is the market doing at that location? If I'm over here, everything shifts to long. Now I'm only looking for longs, and I'm following the H3 and the H1. And I'm trying to combine them both to give me the optimal opportunity to get into the market. So every time you're in a trade, regardless of what you're doing, if you're in a box, you got to ask yourself, okay, what is the market doing? That will give you a tell sign of which way the market is trying to break out the box, like this box. It already told me ahead of time that the market is going to try to break out to the top of the box. All right. Right here, already told me the market is going to try to break out to the top of the box. And if I'm over here, let's say I draw this range right here. Right? What is the market doing at this point? Well, the 30 minutes angling up, but my 1 hour is still trying to find the low of the day. My H3 is trying to find the low. I mean, H1 is trying to find the low of the session, and H3 is still trying to find the low of the day. So there's a high probability that this range is going to break out to the bottom. It's really just a pullback, but if you break it down to a lower time frame, under 1 minute, maybe you get there. Right here. That's that. Is that it? Yeah, it's here in the London, we said, okay.
Yeah, today was a screwy day. I've
Yeah.
been,
So you draw this range on your 1 minute, right? What is the 3 doing? Going short, going short. Most likely the range is gonna break out to the bottom. Right? What happened over here? We had even a tighter range after all that, right? You can extend it. What is the market doing? It's finding the low of the session. All right, so, and it's still trying to find the low of the day. But going into the New York session, right? You know the market's gonna try to shift and find the high of the New York session. So there's a high probability chance that the market may break out of this box to the top of the box. Because the 1 hour is trying to find the high of the next session. When the H3 kicked in, then you was right. Right? Then we have, let's say you have a smaller range here. Right? You're at the low of the session, and now it's trying to find the higher session, right? H3 has changed color. So what's the higher probability of what the market's gonna do to break out of this box to the upside? You have a range right here. What is the H1, H3 doing? H3 has found a saddle. It's trying to move down. H3 is red. So most likely it's gonna break out to the bottom of the range. So you wait for alignment to the bottom. If you establish your direction of where the market is trying to go, when you draw your ranges, you have the high probability direction of where the market is gonna break out. And all you're doing is at that point is aligning your trades to go in that direction.
all
Does that
right,
make
with
it?
with that, we should wrap it up. I mean, we are way past our time. Hopefully everybody's questions were answered. And I'll put up the video either at the end of the day today or first thing tomorrow. Thank you all for attending. Thank you, Santiago, for presenting.
Oh, you're welcome.
And maybe talk to you next week.
Yeah,
All
thank
right,
you very much.
If you
Alright,
guys
thank
have any
you.
questions, if you guys have
Put it
any
in the
questions,
chat.
just post it, put it in the chat in the Skype, and we can discuss things further.
Okay.
Okay.
Oh, okay, thank you both.
All right.
No problem.
Have a
You're
good
welcome.
weekend, guys.
Bye.
Bye.